Now, Standard & Poor's is set to announce its decision on South Africa's credit rating on the 3rd of June, with economists warning that there is a strong likelihood that the country will be downgraded to junk or so-called sub-investment grade. Now, should the country be downgraded, what happens next? To tell us more in studio, we've got wonderful guests who will give us their views on the implications for the South African economy should we be downgraded next week. In studio is Thabi Leoka, who is an economic strategist at Argon Asset Management, and trader and stockbroker Petri Redelinghuys from Inkunzi Investments. Ladies and gents, thank you so much for joining me today.
It's a pleasure.
This is a very scary conversation to have because I don't want us to predict the future, but we need to have a very realistic outlook of how things might go. Thabi, let's start off with your quick fire views. Yeah. Will we get downgraded or not?
You know, I think that there's a very high probability of being downgraded in June, but if we don't get downgraded in June, will be the probability is even higher for December. And I think it's not a matter of if, it's a matter of when. And I know that there have been discussions about trying to avert a downgrade, and I don't think that, I think that is very short-sighted. It's not about, I mean, it's priced in, it's imminent. I just think that we need to look beyond that what happens, what do we do with if we are downgraded? If we are, we need to do the same thing whether we're downgraded or not.
Exactly.
We need to reform the economy.
We'll get into that strategy in just a moment, but Petri, your views, will we get downgraded or not?
I actually couldn't agree with Thabi more. I think that it is a matter of time at this point. There are many structural problems within our country. Most notably, debt to GDP ratio is a bit of a problem. Even though it is stabilizing, you know, if you look at the credit default swaps currently, it's more expensive to insure South African debt versus Russian debt. Russia is in a recession, and our risk premium is higher than that. So I think that, like Thabi says, it's priced in, I suppose, in the credit default swap market. Perhaps not in the equity market yet, but I think it's coming.
Talk to us about the dynamics and the threats and concerns here, because so often when we talk about the struggling economy, we're very quick to point at weaker commodity prices. But there's a lot more in this pot that's stirring together and causing this eruption.
There is like a cacophony of issues. Definitely commodity prices are a problem, and they've had a negative impact on our growth. But at the same time, minus commodity prices, minus global growth, we also have the looming Brexit in June, and also the possibility of a rate hike in the US in June as well. But even if we remove these are exogenous problems. Domestically, we have a lot of problems that we've created ourselves, from political uncertainty, policy uncertainty. We recently had the last unemployment number was the highest since the number was revised since 2008. So, you know, we have, labor rigidities. We have a lot of issues that we need to sort out that are causing, that are preventing us from growing, expanding as much as we should be.
On that note, though, Thabi, are we seeing our institutions responding correctly? Because there has been a bit of criticism towards the MPC before their most recent meeting, where they kept interest rates flat because they continually increased interest rates quite aggressively at the beginning of the year.
You know, I think that it's a collaborative effort. So monetary policy looks at interest rates and looks at inflation, and the inflation, if it breaches the upper limits of the target band, they will respond accordingly. And obviously, if there's currency weakness caused by other factors, whether it's policy uncertainty, whether it's comments made on TV by certain politicians, that increases inflation and also causes the Reserve Bank to react accordingly. So on the fiscal side of matters, I think that they've done a great job in trying to consolidate, like in terms of fiscal consolidation, making sure that we don't overspend, and trying to make sure that we also that consolidation happens. But at the same time, if they're undermined by other forces, where there's spending in certain areas, or one of our SOEs is underperforming and money from there has to be, and they have to, SOEs have to then tap into the budget, or even fees must fall, that impacts on the budget. So there are many factors that are contributing to this problem that we're finding ourselves, but also I think that our institutions are operating accordingly. Having said that, I think that it's also, as South Africans, we need to also, from the private sector also play a role in terms of trying to reduce unemployment, skills development, looking at ways in which we can contribute to, let's say, the dwindling agricultural sector or the manufacturing sector, supporting locally made goods. So there are many things that we can do to make sure that the economy is stable.
Let's hope we do get there, but what we've seen, Petri, is a lot of investors being quite scared and uncertain. So as they've responded by actually taking their money offshore. But from your perspective, how could we potentially see a shift in the investment landscape, whether it's equities, bonds, and others, when it comes to the ruling next week?
Well, I think, markets are emotionally driven, like you say. So when there's uncertainty and fear in the market, people make emotionally charged decisions and the markets react. It's largely why we've seen so much volatility, I think, in our currency in particular. What we can do, I suppose, to stabilize things and to bring faith back into our country is stop doing things like the finance minister shuffle, Yeah.
We want to make you president for a day.
We need to just show that we can be politically stable and that there's that we can deal with matters of inequality and civil unrest, because those, I think, are the biggest influences when it comes to driving sentiment around South Africa. Yes, the structural issues can be addressed by having a systematic plan with that, but if you've got a couple of people coming out and saying silly things on television, that's going to cause investment managers in the outside world to look at us and think, this doesn't look stable. So we need to just address those issues in the sense that if we can get things like the civil unrest, the protests and stuff that we see that become increasingly more violent, we need to bring those under control, and not by some authoritarian approach, but rather by fixing the underlying issues that are within the economy and addressing things like inequality. And we can't keep increasing the governmental wage bill every couple of months, but at the same time we can't let government fail because nobody's willing to do any work because they're not getting paid for it. So it's a very difficult balancing act that I think we have to do. I think the most, I shudder to say this is something that I sort of don't really want to be saying on television and stuff, but I think we need a change of leadership.
On that note, though, how do retail investors need to react? Someone like myself who might have a portfolio, and even my mother who's approaching pension, because the concern here is that perhaps the investment outlook on South Africa and our exposure to equities on this side might not be too positive.
Well, just looking at the equity market, you wouldn't think that the South African economy is actually underperforming. If you look at even growth forecasts, nothing over 2% in the next 3 years till 2018. So I think that it's an interesting one, but I would caution on being too optimistic on the equity market. If you look at what happened also with Brazil and other similar economies, when they did, just before the downgrade, you saw the equity markets weakening, and also during the downgrade, you saw a lot of investors pulling out of the equity market. Yes, they do return, but then I think the initial response is, the market is quite jittery. They are uncertain about the future of South Africa. But also retail is also an interesting one, because retail in South Africa, the way investors look at it is that it's expansion into the rest of Africa. And if you look at also the rest of Africa, commodity story as well. If you look at the big countries, Angola and Nigeria, the first quarter is also a contraction. And I'm expecting contraction in the first quarter in South Africa as well. So when you have the three biggest economies in terms of, one of the three biggest economies on the continent contracting in the first quarter, you expect also very slow growth this year out of the continent, and I estimate about less than 5%. So do you still want to invest, be in a stock that is, dependent on expansion in a region that is not growing?
I get you.
So the way that I said is you need to pick companies that you understand. You need to pick companies that are almost independent of the economic cycle, companies that are dominant in their space. You just need to really stock pick really very well. During difficult times, people are fearful and nobody wants to buy, and those that are brave enough to are oft rewarded. So distressed equities in businesses that are dominant in their space, I think that is where we should be looking, and perhaps increasing some exposure to offshore investments. However, you don't want to now run for the hills and then we don't get downgraded and the rand firms up and you've taken all your money out above 15 when you know, parity for it is, or fair value for it is somewhere closer to 10.
Exactly.
So it's a difficult decision, but yeah, just make sure that, you know, if you are invested and you want to protect yourself, make sure that you keep long-term investment in goal in mind. You know, this is a long race. It's not next week's winner isn't going to win the overall race. And also just make sure that you're buying very high quality businesses.
Fantastic. Unfortunately, we are running out of time, so we'll have to leave it there for today. But as you say, challenging times ahead, and investors need to respond appropriately. Thank you so much for your time today and for giving us your insights. Despite the outlook looking bleak, though, but there will be a turn in the cycle in the long term. A big thank you once more to Thabi Leoka, who's an economic strategist at Argon Asset Management, and trader and stockbroker at Inkunzi Investments is Petri Redelinghuys.